All right, folks, how you doing? Ordinary Income back today. Hope you've all had a great start to your week. And it's been an interesting start to the week, definitely with news coming out yesterday of exactly what you're seeing, Elon Musk purchasing Twitter. And I wanted to go a little bit deeper into how he was able to purchase it with financing and what it all means. There's not going to be too much to show relating to the individual consumer on this one. I'll talk a little bit about what it means for what you can now post, I guess, or what he's making claims, but we'll look at the financing of it, kind of break it down, and show some inner workings that might be interesting if you are a Tesla shareholder or someone interested in becoming a shareholder, I guess. But that'll really be the gist of it today. I do want to say this is not financial advice, not a recommendation to sell or buy anything. Talk to a financial advisor if you got any questions. But in particular, what he did, originally what happened is, and I'll pull up the specifics here, but he purchased Twitter for like $44 million in financing. And what happens is that because of that, every shareholder who has Twitter now is going to get $54.20. Yep, $54.20. And with that, it means Twitter will no longer be public in the market. You can't search it up. You can't buy it from the ticker. It's going to be privately held by, I believe, just Musk, actually, not even a group. So he'll be the sole owner of it, the sole holder of the company. He won't be trading anymore. The idea is, how did he get that $44 billion? There's a lot of numbers. Some of them, if you look at it, you're going to be like, how does this all add up? It's a little tricky, but we'll look at something in particular. So what he did was he had to get a lot of debt financing and margin loan financing. And pretty much what he said is I think he bought $33.5 billion with his own money, $13 billion of debt used for it. And in that $13 billion of debt is where it gets interesting, because $12.5 billion is a margin loan, which means he's using his current shares in Tesla as a means of financing, saying, I'm going to use the value of them to finance. And to break that down a little bit easier, I found this Twitter thread from Robert Frank that pretty much he said that he's adding 88 million Tesla shares he already pledged for loans, with 61 shares he will pledge for the $12.5 billion loans. Overall, in order to purchase Twitter, Elon's going to be putting up 149 million Tesla shares, or 84% of what he's got. The loans are based on the value of the actual shares, not the exact number. So the fact that it's 149 million shares isn't a big deal. It's more so how much those all equate to. Interesting it gets is because, let's see, less than 50% of his Tesla stake, whatever. He's not going to pledge any additional shares beyond the 88 million though, rather than 84% pledge. Could be less than 50% of Tesla stake. Large, not the majority, la-di-da-di-da. Either way, he's pledging a lot of shares. What happens when you pledge a lot of shares, and the risk in this Forbes article highlights it out, is that if Tesla stock drops, he's going to have to repay the loan, and the way he's going to do it is by selling shares, because the banks are going to call him and say, you have to fork up that money somehow because the value that you've given us is decreasing, and we need to lock it in on the debt. If you're going to provide us, shares as a form of collateral, that's fine, as long as those shares pretty much don't do anything, preferably go up, but it'd be good if they stayed at their value. If his shares drop, all of a sudden the amount he's pledged has decreased as well, and he hasn't paid that off yet. So the way he's going to pay it off is by selling those shares to give that guaranteed money to whoever financed it. I think in this case it was Morgan Stanley. So to put it simply, in order to pay for Twitter, Elon said, I'm going to use some of my Tesla shares that are up a bunch and have a lot of value. And because they have a lot of value, I can kind of use them as a means of a loan, a means of collateral, a means of a guarantee that I'm good for the money. However, that means of a guarantee really decreases when the stock price decreases, especially when it has a huge cut, because people get nervous, the banks get nervous, there starts to become a little more panic. You start to take a look at the valuations, and you're starting to think that, okay, if it's gone down 20%, what's going to stop from here? Let alone a news-driven event having it to drop as well. So when you have an interesting case of it losing value, meaning the money you've provided has now, you're tracking the loan itself, and you're seeing that the loan is providing less value. But again, he has to fork over $12.5 billion of debt in the form of stock. And if that stock isn't worth $12.5 billion anymore, you have to figure out a way to get it. And one of those means is going to be by selling his shares to get the cash. So it's an interesting conundrum, because if you're a shareholder, what it's going to cause is that if the stock drops, Elon might be forced to sell his, meaning it's going to continue dropping even further. So it's definitely a little bit of a risk, especially in the environment of investing. But that's the major part of it. I think some of the comments on here are good. Yeah, like the big unknown is when banks are going to start to margin call on his loan. All that. Where does the cash come from? It's a good question, but nevertheless, that's kind of the biggest piece of that is what happens when there's going to be a drop in Tesla. Now, if it goes up, nothing to worry about. And even if it stays where it's at, also nothing to worry about. But the concern is if it goes down, and it's a big concern given that markets are starting to price in different kind of fiscal and monetary policy going on, more so monetary policy from the Federal Reserve. Inflation is starting to become some people worried about. There's a lot more fear factors, so to say. So that's just breaking down how interesting, I guess, or how the deal is going to be struck, or has been struck at least, with Twitter. Let me know your guys' comments. I tried to do this a little quickly, a little shorter, so I might have missed something. I'll leave my Twitter tag in the bio, ironically, and that'll pretty much be it. Yeah, let me know if there's any questions, anything I missed, and all the best today, folks. Keeping it short, and I hope you enjoy. When it comes to you, what does it mean? I think if you're a Twitter user in particular, what it means is I think maybe less canceling. I don't know. That's the idea of what he bought it for, is to really enable more free speech. I'm a Twitter user. I hope he gets rid of the bots. That's kind of been, especially Twitter and Instagram in particular, are running rampant with bots. So I think he goes after that. That'd be great as a user. An edit button would be cool, is what people are talking about. But more so, I think he did it for the idea of free speech, of letting people be able to share their opinions and not having things like a former president be blocked and all that. Whether you agree or disagree with it, that's the idea. He doesn't want people to be taken off the platform for whatever his ideas. And if you are a current shareholder, you will be receiving $54.20 for your share, and that'll be it. Your share is going to be extinguished because it's all going to Musk. So that's pretty much it for today, folks. I hope you enjoy. Have a great week, and I'll be back later this week talking about some other topics.